right, it's recording.
Yeah.
So you're saying that you are buying breakouts?
Yeah.
Okay. So a lot of people do that. They don't even have to be good at trading, and they can be profitable buying breakouts. The problem is that about 90% of the time, especially in the crypto world, buying the breakout will screw you over if you don't take profits super early. Because everybody's buying the breakouts, and so somebody has to take the other end of that trade, and they're only confidently giving it to you because they intend to be in profit soon. Can you guys hear me okay?
Yeah.
Yes, I'm just on mute.
Okay. So, like I said, for the past, basically since the beginning of February, it hasn't been the worst idea to buy breakouts, especially after Musk putting in announcing his $1.5 billion acquisition. But other than that, it's, overall dangerous. If you go back, you can see there's a breakout. If you bought the confirmation of the breakout, you would have had to take profits right there, or you would have taken a loss. Or if you bought this breakout, you would have had to take profits right there, or you could have taken a loss. Or, there's just so many dips right after the breakout that buying the breakout is only good for scalping. And that only even works in a bull market. If you try to buy the breakouts in a neutral market, you're going to have a bad time. But yeah, I understand it works. It's been working for the past 10 days, basically since this January 31st. See, this is January 31st right here. Every time we went to new highs, we held it up until like just a little bit on February 4th. But so I don't really have anything. I mean, I covered scalping with you, right? That was our last VIP session.
Yeah.
So at least you have some, a good rule of thumb on when to take profits and, cut your losses and whatnot. So other than what I covered last time about buying breakouts and scalping, I can't really think of anything else to mention, just mainly because I haven't spent a lot of time doing it because of how dangerous it is. But yeah, so long as the market trends like this, you guys can, buy the high, buy the low, buy the middle. It doesn't really matter if you're willing to hold. Looks like here on the total 2, we have a maximum of a 5-hour drawdown before new highs. I wouldn't recommend it. There's enough good setups that we don't need to be risky. Buying breakouts will work for you till it doesn't. Hopefully you don't let the success of buying the breakouts give you a false sense of confidence, and then you go in heavier on the next breakout and heavier on the next breakout, and eventually one of those breakouts are going to screw you. So you can basically compound your money. You can start with 1,000, and for the last 10 days you could have $10,000 buying the breakouts. But then when you're using that $10,000 to buy a breakout tomorrow, you could lose like $6,000 in one trade if you're not careful. Because if you expect that trade to act like the past 10 trades, it can screw you over really badly. So long as you're minding your risk and you're not making excuses just because the past 10 days were successful, I won't give you shit for doing what you're doing. But you just have to keep in mind that the market won't always be swelling like this.
Yeah, I understand.
Okay. And that goes for you too, Mike, obviously. You could also buy anything and make money just like he is. It works until it doesn't. I've been in this long enough to know, there's a million strategies that work until they don't. And it's actually worse if you're doing something stupid and you make money off of it, because it trains your brain that it's a good idea. Anytime you get instant gratification for something, you get that hit of dopamine, and it basically programs your brain into thinking it's good. And you'll seek it out in the future because you'll remember the positive times. But it's not until you get burned a few times that you're like, oh shit, I guess I was just getting lucky the whole time. But yeah, so long as you're keeping your stops really tight, basically, you want to risk less than a third of what you stand to make. So if you're buying this breakout, let me draw the line. If you're buying this breakout, zoom in. I know this is total 2, so this isn't even very accurate. But if you're buying this breakout, let's say you looked at it, saw it breaking out, saw it dip, and saw it going to new highs, and you bought on this candle right here on the 30-minute time frame. You would not want to hold back down to where you bought under any circumstances. You would have to take profits early. That's the only way you won't get burned eventually. And a lot of people, they buy a breakout, they hold through that dip, and they're like, oh, that's nothing. We ran again. And then a bigger dip happens. And then that goes to new highs. And they're like, oh, that's nothing. And then, when this dip happens, they think it's going to be another thing like this. And then so they just hold, they don't even sell. And then it just keeps coming down. And then, they take a big loss because they bought this breakout here and they went on heavier. Basically, the more successful you are in the past, the more money you're going to have, the more confidence you're going to have, and that compounds into a worse mistake when the time comes. So you see, you have all of these tiny dips, and then all of a sudden you have a hefty dip, and then you don't even go back up to new highs, and then you have a bigger dip. That's the kind of shit that you're gonna encounter eventually. Is you'll see all these tiny dips going to new highs, and you'll get a false sense of security, and then you'll take a big dip and still get out alive, and then maybe you'll buy this breakout or something because it's slightly higher, and you think it's going to go to new highs again, and then you're sadly wrong. And like I said, you trade this breakout with 1,000, you turn it into 2,000, you hodl through that, and you turn it into 4,000, and then you add on more here. Now you have 5,000 on it, and then you take a tiny loss here, and now you have 4,500. But then you buy back in right here with the 5,000 again or whatever, and then you don't take profits, and you end up taking a small loss, and you regret again selling because it reverses promptly, and then you buy back again somewhere, wherever, and then take a bigger loss. So basically, whenever you don't sell in a pump, you train your brain that it was a good idea. So when this dipped and then went to new highs, you're like, yeah, I was in my right mind to hodl through that loss, or I was in my right mind to let all my profits go out the window. And then the same thing happens here. It trains you. And I'm pretty sure they do it on purpose. They're like, look, guys, here's another shallow dip that you could have bought. And then you see all these shallow dips. And you're like, I'm going to buy the next shallow dip. And then you just get fucked. So just keep that in mind that the market won't stay trending the same forever. What goes up must come down. So you can see these dips are tiny, 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 bigger, 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 tiny, tiny, bigger, bigger, tiny, bigger, bigger. So it'll eventually screw you. You just have to make sure that you take tiny losses. Never make an excuse. Just because you were successful before doesn't mean treat every trade individually is the best thing that I can tell you. No trade is the same, even if it's the same coin, even if it's the same day. Just because you were right to hold through a dip last time doesn't mean you'll be right to hold through the next dip. So just keep that in mind, and you probably won't get too wrecked. But yeah, it's a very common misconception to think, oh well, I held through the last 10 dips and made profit, so I'm just going to hold through this dip. That's how you're going to lose all your money. I'm not sure if I could say anything else about buying highs other than that. It'll work until it doesn't.
Yeah, for sure, man, for sure.
Any other topics we might be able to cover?
No, I don't really got questions. You can talk about whatever you want.
Okay. Well, Mike, do you have anything to cover?
I'm just running. I don't know. I like listening because you usually beat me to the punch sometimes with ideas.
Okay.
While you were talking, I was looking at my chart and I was looking at places where I've made mistakes similar to what you were talking about. And I was just sort of dissecting some of my failures and some of my bigger trades and sort of rethinking what got me into them and how to not do that again.
Yeah. It's kind of like what Randy House says. Being alpha has no place in trading. So like, in the animal kingdom, if you're alpha, you can take a hit and just keep on fighting. You don't want to have that mentality in trading. Like, well, I took the last hit and I didn't sell for a loss. I didn't panic sell and I made money still. And so then it happens the next time and it's a bigger loss. And you're like, well, fuck. Well, it worked all the other times. I'm going to hold strong. And then it just never recovers. And you eventually have to sell for a loss because you'll get liquidated otherwise. Or, maybe you won't get liquidated, but, you'll be 50% down and you're like, I can't take it anymore. Or maybe you just want to trade something else that's going up and this is going down. So you just take your losses and move on. Like, for example, right here, like, oh shit, it went to new lows. And then so you sell that. Like, it's definitely over. and then, or maybe you sell this because you think, you know, it's resisting that, and all it does is give you a better entry and then come back up to it. It's just, there's a lot of fuckery happening in crypto trading.
Yeah, it's a wicked mistress.
You know. But this is a nice bullish volume profile, at least on the total too. That's leading up from the start of February. So this could easily continue. Let's check it out on the daily. Oh. That is nuts. We went from 40 billion to over 10x. We're at 500 billion now. What's crazy is the last bull market ended in December 2017, January 2018. Right here. We're just getting started, guys. This is the altcoin market. This is the altcoin market at the peak of the last bull run. We're just now there. So we could still see a 40% dip from here on altcoins. And that would just put us back to, in a lot of regards, just the end of December, the start of January. We're gonna just be really healthy. Let's see what happened last time. So there was a bull run here in 2015. As soon as we went to new highs, we dipped. Let's see how much we dipped. That was a 40% retrace, and it happened in less than 10 days. And that was super healthy. Let me make this. There we go. And then this is here. Yeah, so that just like went to new highs just barely and dipped into it, got a higher low, and then rallied. So that's where we want to be aggressive, not right now. We're not right now where we're just officially going to new highs. We want to be aggressive after we go to new highs and then dip and then get a higher high. That's when all the real money comes out. And so right now we're actually on the daily. Oh wait, that's a drawing. I thought that was a candle. We're just now there, and we have bearish volume at least. And they're buys, but we have bearish volume pattern till about the end of January, basically. And then, you know, this is smaller than this one, and this is smaller than this one. This is probably where the actual support is, somewhere between the end of November and the end of December, somewhere in this level, with the demand being right underneath this. Basically, the first rally after the September blow off, if you guys remember what happened to the market in September. The same thing happened here. We had highs and then we came down from, and then when we got up above it, we promptly fell 27% in a week. 30% loss in a week is a pretty strong loss. When you're buying the breakouts, what time frame are you trading, Jules?
I analyze the chart at like 1 hour, 4 hours, and then 50 minutes, 5 minutes. I look for the breakout.
Okay. All right. At least you're not looking for breakouts on the one, trying to trade the one. So you're probably buying with a bunch of other smart yet impatient people.
Well, yeah, I'm just basically. You covered it in the video, and it was like support the whales. I think you named it. So I'm just trying to implement that strategy, and it's going pretty well.
Okay. Are you on a computer or are you on a phone?
Both. I'm listening with my phone, and I'm looking at the screen with the computer.
Would you be able to share your screen and walk us through the strategy that you're using? So Mike and I can see it, and maybe one of us can either help you or we can learn from you. You know, teaching is part of learning.
Yeah, sure. Wait, I haven't. The only time I use Zoom is to listen to you, so I haven't really used it like that before.
Okay. Well, let me see if I can give you permission to share your screen.
I think only one screen share can happen at a time.
Okay. Well, then I'll turn off my screen share. Is my screen share already off?
No, it's still on.
That's weird. It's not. It says new share. It's not Oh, okay. Let me just unselect it. Maybe that's
But
what I did.
I can just tell. I mean, you can. I just tell you what I see, and then you can draw it on your screen. Maybe. I think that's easier.
I don't think so. We've tried that guessing game before with other people, and
Yeah.
no, not here, there. No, 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 not there. Here.
Left, your other left.
Yeah. I don't know how to unselect my screen share.
I think you just where it says share screen, it might say stop sharing.
Oh, okay. Stop share. Got it. For some reason, I was thinking that meant stop the thing. All right, I enabled multiple participants to share their screen. I averaged into the dip in BNB with just a couple BNB, and now it's in the green again. Are you still in Aave, Mike?
I was trading Aave on spot.
Oh.
And let me check.
What's the purpose of trading on spot if you're not going to hold down your liquidation anyway?
Because if this thing fucks up, I don't want to, like, if the robot fucks up, I can just turn it off, and I'm holding some coins, and I can just hold, like, I've got $500 in the account, and so if it buys these coins and they go down, all of them are ones that are like big enough name that I trust that they'll be back to their value at some point, and I can just sit on them, right?
I see. Yeah. So you're not trading them; you're buying them. Is that what you're saying?
Yeah. But I was charting them and like that's what I'm trying to do. Like, is I'm charting it on one side and trying to decide, okay, how would I actually trade this by hand? And then I'm trying to figure out ways to make that thing do what I would want to do normal, like naturally. You know what I mean?
Yeah. So did you have success doing that?
Yeah. Well, here, hold on. Is his screen shared yet? No.
No.
Here, where's my?
He's hiding all of his porn.
No, man.
Here, look at. Can you see my screen?
Yeah.
So.
Why did it have the pair backwards? That's weird.
Yeah. So fuck that. All right, hold on. It's. You share. Hold on. Where is it?
Are these screenshots?
Yeah, I saved. Yeah, it's acting up now. But so see those triangles? That's where it was buying and selling over the last like 24 hours.
Nice.
So far so good. But like I was.
What is GDAX? I thought that was Coinbase.
Yeah, it is. It's just the legacy name they used for it.
Oh, okay.
But here, I'll stop my sharing.
I'm not sure if he's closed all of his windows yet.
How do you share your screen? I haven't.
You click the share screen button. It should be next to start video, mute, chat, reactions, and stuff like that.
Oh yeah, I got it. Let me just find the right charts.
Okay.
So use as an example.
Yeah. Give us the best hindsight bias. See what we're missing out on here. Yeah, I know most best is redundant, by the way.
The most bestest.
Yeah, the extra most bestest. I sent an email into the store about this laptop from. I said, hey, I've turned on power saver. I've turned off the fan silent mode. I've turned off the turbo mode. And this shit is still overheating. I want my money back.
Oh no. Is it like so? It's like hot to the touch.
I mean, it gets up to 80 C.
80, so 160 degrees basically.
Yeah, I guess so.
Fuck. Yeah, that's hot.
Yeah, I mean, it still works just fine, but in 6 months, it's probably gonna melt.
All right, can you see my screen?
Yes.
So I draw this triangle on ADA USD, 1 hour.
No, this looks like more of an accumulation triangle. That'll probably play out.
So then I would go to 15 minutes. And I would look basically, if it tries to break here, I would try to buy the breakup, but only when the breakup is happening. So I would DCA down to this trend line. So let me draw it real quick.
I see the volume's kind of bearish up here too.
So it would just do like this, then would break up here, and I would start to buy it, but I would DCA down to the trend line. I would not buy here.
I see.
So I would not buy a big breakup. I would try to buy the beginning of the breakup, not when it already happened.
Okay. Well, that's good. Yeah, usually there's enough breakout buyers in the bull market that if you buy before the breakout, you have pretty good odds of success. So long as you're buying as it's breaking out before it breaks out.
Yeah.
Because even if it's a fake out, you still have a chance to take profit before it goes back down. That's cool. How many, what's your average return on a trade like that?
I mean, it's I use lower leverage, so I don't use 20x leverage anymore. So it's like 5 leverage, and let's say I take profits quickly also to reduce the risk. I don't know. It's about 20%. I got some more. I got some less. I think it's like 20% average that I won on trades like that.
Okay. So you're
So
not
it's
looking
not
for a
bad.
moonshot or anything.
No,
And then
I'm just trying to trade daily and have
Yeah.
profits daily, like consistent.
what is your average drawdown? Like what kind of losses do you commonly take doing this strategy, like percentage wise?
I mean, I use
No
your
losses?
strategy, so no. Of course, I got losses, but it would be like my last order would be right above my stop loss, like you taught me, and my stop loss would be like when I have confirmation that the breakout is not happening. So I mean, it would be pretty tight. I can't really put a number on it, but I haven't got big losses on using it like this.
Okay. Well, if your average draw up is 20%, you could just divide that by 3, and which is like what, 7%? Just want to make sure that you're keeping your losses under 7% if your average gain is 20%.
Yeah.
Are your average losses under 7%? Are you thinking, or did you hear me?
I'm looking for another example I can show you.
Oh, okay. All right. I never really thought about the 3 hour. That kind of makes sense because 3 times 4 is 12, and 12 is the 2-day divisible by 4. So that's kind of interesting. It's like a fine-tuned 2-day in a weird way. I never even looked at the 3 hour. So yeah, I'm assuming you have a lot of luck with these Fibonacci pivots.
These lines,
Yeah.
I mean, they help me just to have a good view on where the support is, where the pivot. I like it. I think it's a good indicator.
Did you discover yourself, or did you find someone else using it?
No, I found it, and I found someone else, and he uses it's not the standard wait, how do I? So it's Fibonacci.
Oh, okay. What are the other options? Huh.
Normally, I think when you just put it up, it's on traditional, but he puts it on Fibonacci, and then 15.
Oh, okay.
I like it.
Yeah, seems like it's leading. It's not lagging, so it's a decent indicator to have.
It's kind of amazing how it lines up the Fibonacci lines.
Yeah, Fibonacci is fucking genius. Wasn't he the guy that invented the helicopter before it was before you even had planes?
Galileo. I mean, sorry, Da Vinci. Sorry.
Da Vinci, yeah. Genius.
Yeah, I can't really find another good example, but you get the point. What I'm trying to do.
Yeah, just make sure that you're taking less than a third of the loss is what you stand to make. And
yeah.
So basically, think in terms of risk. Make sure that you're always taking a third of your reward as a loss or less.
Yeah, for sure.
So, I mean, if you're looking at 20% gains, I mean, do you always take profit at 20% or how does that work?
No, I just use it for this strategy to reduce my risk.
Okay.
Because I know it's not a great strategy to write your profits like the one that we use in the group.
Yeah. Cool. And then do you look at the stock RSI and the RSI whenever you're trading too? Or is that
just to get a view of when it's overbought, when it's oversold, but I don't implement on it. But I like it to use to just get an understanding for the price action.
Okay. Well, we have 8 minutes left in this free Zoom session.
I'll so you can share your screen if you want to.
Oh, I don't know what to share. I want to cover whatever you want to cover because this is your session. So.
Yeah. I mean, I've just been, trying to trade daily, trying to stay consistent, not take too much risk.
I know a couple strategies that would go well with the strategy you're doing. Have we discussed in detail the indicators that I use?
No, only the volume indicators. We had a few lessons on that one.
Well, let me show you some indicators that I think will benefit your strategy that you're doing now. And I've shared these with other people, and they've had good success with them too. For example, the acceleration and deceleration and the ADX trend strength. Let me get rid of, oh, no, that's it, okay. And then we'll go to ADA, I guess, and go to the 4 hour. Yeah, let's go to 6 hour. And then I'll erase all that, obviously. So, I wonder why this is dwarfing so much. So the ADX trend strength says so long as the volatility is increasing, the price will too. And then once the volatility stops increasing, a reversal is more and more likely. For example, see how sharply this trend strength reduced?
Yeah.
And that ended that trend for a little bit, a couple days, 4 days, 5 days, just from that sharp reversal. And so if you're in ADA and you're trying to ride it out and then it starts, sharply coming off like this, you know that, reversal is more and more likely. But where it's really profitable is in situations like this where the ADX is really low. If you have a bullish bias and the ADX is really low, you can buy that. You can market buy it with tiny risk. And then whichever direction it accelerates first will be your confirmation of it going the way you want or the way you don't want it to go. So you could buy right there thinking it's going to go up for whatever, it did a U and then did a V and then paid that toll. And so you could have a little bit of a bullish bias here. And then you would get confirmation that it's going up as soon as the ADX starts to climb. And so it's a good way to identify low risk opportunities. The same thing happened here. In this case, it's just so that the trend strength went up on a red, which means it was getting, bearish strength. So if you had a bearish bias here, you could have, market sold or market shorted with minimal risk, and then you would get confirmation very quickly if you're doing the right thing or not. Basically, if you're buying or if you're trading a high volatility, you're taking maximum risk because the trend could turn right or right around. You could either, sell the bottom or buy the high. And it's a very bad idea. But if you are entering with a bias at low volatility points, you're taking minimum risk. And it's even easier to see when the move happens versus if you trade as the volatility is increasing, it's a lot harder. See, like right here, it started to dip, but the volatility was increasing. So that the trend strength was still going up. But if it's more volatile, that means it could go up and down harder. And so it's harder to see what the move is actually going to be as the trend strength increases. But it's very easy to see what the move is going to be if you're entering the trade at a low volatility point. And so this could apply to your setups. If you were trying to buy breakouts, for example, right here, if you thought this was going to break out and you were looking to buy the breakout of this, you could, start piecing in here at the low volatility point. And then as soon as the volatility increases to the upside, that's your confirmation. You could throw on a little bit more before the volatility gets bad, where you're actually taking more risk on your entries. And the same thing applies to exits. You don't want to exit if the volatility is still increasing in your favor. So if you're longing, you don't want to exit until the volatility is no longer increasing in your favor. So it's really helpful. Does that make sense to you guys?
Yep.
Here's a question about that. Can we assume that like 160 to 200 is sort of a red zone for that?
Yeah. So anything, this line that automatically gives at 100, anything above that is considered above normal. So if it's above normal, the odds of a sharp reversal are higher. And then furthermore, you can draw trend lines for the above normal highs, which is somewhere like this. And anything above that, the odds of reversal are even higher. And so the last thing you guys want to be doing is entering trades anywhere in this deadband zone. Just keep that in mind. And then if it goes above this, it's not that you have to sell, it's not that you have to close your trade, but you have to be looking for that sharp reversal. The higher it goes above this 100 line, the more you need to be looking for that sharp reversal and getting out before it snaps down. And on a higher time frame, this is even easier to read. It's going to give you less signals, but they're going to be even more accurate. So see right here, very low volatility. You could have bought that with a bullish bias. It's in a bull flag. It's at new highs. It came from a spring low. You could have bought that with a bullish bias and rode that up with no other indicator, just simply because it was low risk and you had a bias. And then if it accelerated red, you would just get out. I say accelerated, but if it grew in ADX trend strength red, you would just get out and take that tiny loss. But if it's growing in green and you're long, then you would just hold it. And it wasn't until it got above that 100 line that it even wanted to come around. I think that market makers purposely wait for the volatility to go one direction hard enough, and then they take the other end of the trade and screw you over, like right here. So they have like trending volatility points, and once it gets to a certain level of volatility, they just reverse it on everyone. It's really interesting. It happens on gold too, like every asset that you can trade really. Once the volatility gets high enough in one direction, the other end of the traders come out. The bulls come out against the bears or vice versa. This is pretty cool. And then the other one is kind of similar, but in this case, you want to be entering trades at the deceleration points. This is the acceleration deceleration indicator by Bill Williams. And it basically shows you, it's kind of like trend strength. I don't really know what it measures. I used to. Let me change these colors so I can see it better. I don't know if you guys can see it well, but so on a triple color change, that's confirmation. So in this case, it's kind of giving you a lot of false readings on the 6 hour, but the daily is a little bit more easy to read. So right here, it gave you triple green. I know this is yellow, but imagine it's green. That would be an indication that The trend is coming back up. And then so long as it doesn't give you triple red, it's still going up. And the same thing applies to the downside. It doesn't look like we ever got a good down signal. But here's a triple red. So you would close and then you wouldn't buy back until you got a triple green, which is right here. So yeah, the dailies for this one isn't really working too well. Let me check the 2-day. Yeah, it looks like it's just not really helping on ADA at all. But I really do like the AC indicator. It works even better at smaller time frames. Like here's the 15-minute.